Joining me to dig into the latest fiscal incentives for this critical energy sector is Karim, the Group CEO at Shoreline Energy Group. A thank God Friday evening to you, sir. Hope you had a great week so far.
It's been wonderful.
Thank you so much. You come really prepared. Give me your first word on this latest tax incentive package announced by the Finance Minister.
I think it's a big plus and commendation to Mr. President, President Bola Ahmed Tinubu, and his team, the special advisor to the president in energy,
yes,
Oliver Hine, and the Honorable Minister of Finance, because what they've done is combated and making Nigeria very attractive and competitive in attracting the required capital into the oil and gas sector, which produces almost 90% of Nigeria's foreign exchange.
What's contained in this package of tax incentives?
Look, first thing is there's three buckets to what Mr. President has done. The first one is the contracting cycle. What the president has done is signed an order, an executive order, in shortening contracting cycle in the oil and gas sector, reducing it to as low as 6 months. Number two, also upping the spending limit for oil and gas companies, moving it from traditional $250,000, which has been there for the last 20 years, to a $10 million limit. What that does is, one, brings us in line with competitive operational methodology in the world, where oil companies can now buy spare parts and replace spare parts and spend up to $10 million in injecting that into assets. That is creating more production than Nigeria so desires and needs. That's one. The second one is a very strong one, which is the local content policy. The local content policy, when it was thought of and thought out, was thought to energize the oil and gas industry, to help bring and galvanize Nigerians into the sector in providing support services to grow in the sector. But what we've seen over the years happen is it's just created a lot of middlemen. What this act has put to place is NCDMB should create a structure by which they're evaluating properly, first and foremost, cutting down the timeline, evaluating properly that there's critical skills being created locally and critical support services being created locally that enhances the local content policy, that's creating jobs to support Nigerians operating in the oil and gas sector, but not making it too expensive and making us very competitive.
Great. So let's go back to the first item, which is the contracting cycle. Why is that important from a policy point of view?
Look, traditionally, if you look at oil and gas, Nigeria is traditionally an aging oil and gas country. So if you look at the oil and gas fields, we have infrastructure that is sitting there or sat there since the 70s and 80s. Some of these equipments, yes, they're still working, but they're not working at par.
Onshore, offshore?
Onshore, of shallow water.
Shallow water.
So what you see is you need the relevant investment for spare parts and most times renew them. I'll give them an example. We, in some of our fields, still operating on Clark compressors that were installed in 1980s. So you can imagine the efficiencies of these compressors. So what this has done, now, if we were to import compressors, the contracting cycle is so quick now because Mr. President is being very magnanimous in signing that order, that companies and operators can now spend up to 10 million without resorting or reverting to the national oil company, but it's an operational matter in
without
investing.
resorting to the NNPC.
Absolutely.
Why did we have that cap in the first place? Because those who are independent in oil companies, whether local or international, they're in the private business.
You're right, but remember, most of these assets, NNPC is a joint venture partner, or PSC. Okay. So NNPC's involvement is very important because remember, if you look at our oil field, we operate in a joint venture where 45% and NNPC is 55%. So for every 100 barrels we produce, 45 goes to us, 55 goes to NNPC. So which means the cost for every $100, we pay 45 cents, NNPC pays 55. So NNPC must be involved, but it's streamlining the contracting process and cycle that's now making it faster to energize in the industry. Because as an operator, we do not have to revert back to them into a very prolonged cycle, but it must be shortened, it must be concise, concise, and those relevant expend can be done to execute those projects quickly.
So $10 million is the latest figure from $250,000.
Correct.
Do you think that those of you in the industry will do this very quickly?
It's already happening, right? First and foremost is you must understand the type of partnership and partners you have. Then both of you must sit down and mark out the matrix and methodology in how to execute. Today, look, something I think is not been amplified enough. Today, Nigeria's got 19 rigs operating in Nigeria. We've not seen that for over 20 years. We've got about 15 rigs, land and swamp, 5 offshore. That's huge. But we're nowhere near where we should be. If we want to achieve the presidential directive of 3 to 4 million barrels, Nigeria should be running minimum 30 to 40 rigs campaign. And that is what I see this will energize.
24 hours round the clock.
Absolutely.
So a lot of assets that you folks use in the industry are old. They need to change to modern equipment.
Look, most of the assets in Nigeria, most of the assets that's been divested by the international oil companies are old, aged assets. Look, the oil business is business. It's international business that's got international best practices got to support it. The international oil companies are not leaving Nigeria. What they are doing is right-sizing their own portfolio to make sure they're not only making more money and more competitive, they are businesses that are supported by global finance.
So they want to get out of the
old, more expensive assets to operate, sell it to someone else, and focus on the deep offshore. And this is what the president's directive, this new one, has done.
Yes.
If you think about it, Nigeria's 47 billion barrels of estimated reserves. Over 25%, about 12 billion, is deep offshore. But over $82 billion been invested globally deep offshore. Nigeria's not seen any of that money. The last deep offshore project in Nigeria is the Usan project in 2013. Nigeria is not competitive. But with this new order and directive by the president,
we're going after that money.
We are going after that money. Nigeria is becoming more competitive with both the gas incentives and the oil incentives for both the non-associated gas and oil itself. We will become an attractive destination for global capital because global capital is looking for return. Don't be shy of that. What we're doing, we're now starting to be in line with places like Guyana. We're starting to be in line where, if you look at the North Sea, they're going the opposite direction. So if you look at the global oil and gas company, what's going to happen is the attractiveness of this policy would only help them direct capital to the missing areas of the deep offshore assets where it's energizing more oil finds and more gas finds to come into both domestic and international market, which would engage and further energize accumulation of the capital Nigeria needs and the foreign exchange Nigeria so desires.
So this new policy is not just about tax incentive.
No. It's a combination. Tax alone cannot change the dial. You need...
I thought as much, but we need to ask you.
No, tax alone cannot change the dial. That is why it's dissected into 3 areas. The dimension is 3 areas. And the first major one is operational efficiency. Very important. The second one is ability to energize in local content to be more effective that will affect the lives of Nigerian and Nigerian practitioners in the industry. And the third one is the tax. So with these 3 combinations, driven by Mr. President, sky's the limit for the industry. So I think for Nigerian oil and gas today, we should celebrate what has just happened because we will now start seeing Nigeria being more competitive deep offshore. And this tax, by the way, is for existing. So these are assets that's actually taking FID that will go into plan between now and 1st of January 2029. That's huge. Right? And also for other people looking at deep offshore assets with the bid round that's coming, Nigeria is now going to be an attractive investment destination for deep offshore investments in oil and gas.
Interesting. Is this a silver bullet, as it were, for the industry?
It is. It's a game changer.
It's a game changer.
It's a game changer for the industry. I think the focus of government is Nigeria's realized the goose that lays the golden egg, it's oil and gas. And if governments in the past have looked away from that, we find ourselves where we are today. Think about this. In 2014, Nigeria was producing close to 2.5 million barrels. And in 10 years, Nigeria went as low as below 1 million barrels. This is the mismatch. Nigeria, compared to competitive states, if you look at the UAE at the last ADIPEC, the target of the UAE and ADNOC is they want to be producing 5 to 6 million barrels by 2027. And most of those contracts have been awarded. So Nigeria is just beginning. This is a step in the right direction, but we need to galvanize and continue energizing the industry to make sure it gets to the promised position and there is no stumbling block in making this happen.
What you have in front of you.
Yes.
Well, that's what the government released. I sit down in the newsroom every day and I see, for example, Angola, for example, moving furiously with oil and gas finds, giving new licenses. Uganda is moving furiously with the $5 billion East African pipeline. Senegal, Sierra Leone, and a few others. And I'm saying, hey, where is Nigeria? So you think this is catching up with the game of the investment money still out there despite the pushback for fossil fuel?
This policies is putting Nigeria again in the forefront of an attractive oil and gas investment destination. One missing link that policy drivers in Nigeria and the executive should never forget. Nigeria is no longer one of the only oil-bearing nations on the continent of Africa. That was 20, 25 years ago. Today, you're finding oil everywhere. Namibia's found oil. Mozambique has found gas. South Africa is looking at it.
Liberia is
absolutely.
digging.
So the reality is this. We need to be an attractive bride to the global financiers of oil and gas and making Nigeria an attractive destination for those capitals that's looking for returns. Capital is not short, even with decarbonization. There's availability of capital. But the reality is, do I, as a money manager, do I want to put my money in a market that's unattractive and all I get is negative news about that market? No. But this policy that's been put out by government, if executed to the T by both the policy drivers and practitioners, Nigeria will be a formidable destination for capital in oil and gas.
How does this latest policy fit into the decade of gas agenda?
I think it further buttresses the point because the incentives around non-associated gas for both domestic in supporting the local gas, further pushing and helping to stimulate industrialization is huge. Also, feeding into LNG is huge. If you look at the global market for LNG today, with the disruption in Russia and Ukraine, the European Union relies solely about 80% of its gas requirements on LNG.
Yes.
That's a big market.
Look at the investment this year, just talk about it's going to be around $170 billion.
Correct. And how much of that's come to Nigeria? Zero. So this is the dynamics of what changes this. But it's not going to be quick fix. This is a 2-3 year rolling plan.
What we have in front of you.
Absolutely. It's a 2-3 year rolling plan. The gestation period of people taking FID is a 2-3 year plan. So to get to that, we need to be seen as serious, we need to be seen as committed, and this is a step in the right direction.
That's cracking, this breaking the glass ceiling.
This is not only breaking the glass ceiling, breaking the roof. Because this has shown we are now becoming very serious in talking to the global energy market.
The banks,
Nigeria is ready for business. There's investors out there. If you look at what's happened in the world, Nigeria fell asleep, the United States woke up. The United States of America, in 10 years, gone from a 6 million barrel a day market to today being the largest producer of oil and gas in the world.
Yes.
That's unbelievable. With fracking, but the reality is this, it tells you, and this is the first world country that's in front of decarbonization. But what are they doing? They're drilling.
Furiously at the backyard.
As they say in Houston, Texas, drill, baby, drill. And the reality is, I think the slogan and mantra for Nigeria is drill, Nigeria, drill. because we mean business, but we have to show it by actions. And that's, government has taken the drive, and we need to follow.
The government is also investing about 112 billion naira, as it were, in some indigenous gas companies. Tell me about that. What's the end game of that?
Look, the end game of that is this. Look, there's been a big hoo-ha and cry around energy security, very expensive petrol, right? Now, by investing in the sector locally, if you look at the push from government on CNG powered cars and buses and stuff, this needs to be supported with the flow
of money,
of gas, and that needs money to support development of those infrastructure and also getting that to market. Look, it doesn't matter how many CNG buses you have. If you do not have the supporting infrastructure like the CNG stations built all over the country, how's it going to run? You're driving to Ibadan, your vehicle stops at Shagamu. If there's no CNG gas station, you're going nowhere.
Like the petrol station?
Absolutely. So the infrastructure for petrol stations are there. The support network in building the CNG stations scattered all over the country to support
has to start today.
Has to start today.
Or even yesterday.
But it's happening. It's happening. We're seeing the rollout of CNG buses, CNG keke napeps, CNG taxis is coming all over the place. But we still have a long way to go, because to stimulate this, there's a lot of investment that needs to be poured into this sector in energizing and making it work.
I'm sure you've been having a lot of phone conversations since this came out yesterday.
Yes.
I can still understand the excitement. Quite a lot to unpack there for us tonight. Thank you so much.
Pleasure.
Thank you. Have a great good weekend. Thank you so much
for
coming through. We appreciate those deep industry insights as always. And of course, we share the enthusiasm on this latest move by the government. Thank you so much. We appreciate that. Karim, the Group CEO at Shoreline Energy Group.